Thinking about day trading, or maybe you've even started? Watch today's video to learn 3 things that you should be doing to protect yourself. I'm not going to spend the time in this video to tell you why day trading isn't good for most people. I think by now you realize that day trading is a lot like gambling. It's not really investing, and the odds are stacked against you as the individual investor competing against large institutions like banks and hedge funds. That being said, there are 3 things or 3 rules that I'd like you to follow if you're going to be doing it. The first rule: only invest what you are prepared to lose. When you are day trading, understand that there is a real possibility by owning single stocks, individual companies, that company could go bankrupt or something could go wrong there. For our clients, we tell them no more than 5% of your overall net worth. And I think that's still a little bit high. But again, if this is something that you want to do and you want to learn with, and this is your play money, understand the risk that you're taking. Rule number 2, do not buy on margin. Buying on margin, you are borrowing money from the bank so you can buy more shares, is a way to get leverage. Leverage is a way to either amplify gains or losses and can be really dangerous. The easiest example I can show you this is buying a stock for $100. If you were to use all cash and buy the stock for $100 and the stock was up 10% and you sold it, you would make $10 or 10% on your original investment. Now, if you bought the stock using leverage or borrowed money, let's say you put $10 down and then you borrowed 90. If that stock goes up to 110 and you sell it, well, now you've made $10 on your investment of only $10 because that's all the capital that you put up. You actually made a 100% return, 10 on $10. Now, the unfortunate is the flip side with losses and how they can get magnified. Going back to our original example, the investor who put $100 and the stock went down to 90, you lose $10 or 10%. For the person who used leverage and bought the $100 worth of stock after only putting a down payment of $10 down, their $10 loss becomes a complete wipeout and you lose 100% of the money you put in. So be careful with margin. It can really amplify gains, but on the flip side, it can amplify losses and get you in a lot of trouble very quickly. The third and last rule is just avoid penny stocks. There's no reason for you to be investing or trading in penny stocks. Penny stocks are companies that are priced in the pennies or below $1 because they are usually not good companies. They're struggling, they're distressed. There's a reason why they're not worth much. And while the stock can move a couple pennies in a day, and it might be attractive if you own a couple thousand shares of this company, more often than not, these are just companies that you want to steer away from. That, remember, they're a penny stock for a reason. So just avoid the quick hit or the home run by trying to buy penny stocks and profit quickly. If you have any questions about your own portfolio or about investing in general, please feel free as always to reach out. We'd be happy to help.